All right, good morning, everyone. It is 8:30 in the morning of the 6th of April, 2022, and this is my pre-market strategy session. So this morning, I am starting off with a chart, an hourly chart of the SPY. The SPY is a proxy for the S&P 500, and as opposed to starting off with like the S&P. I get pre-market data on this one. So like if I pull up the E-mini S&P, let me go over here real quick. Let's go to the risk range place. So the S&P index itself doesn't actually start to show anything until the market open, and my E-minis are delayed by 15 minutes, I think. I don't have the charting subscription plan for the E-minis. I don't trade the futures contracts. I don't trade them very often, which actually I probably ought to, but I haven't traded them in years, and so I don't really want to pay for the subscription to the charting software. So I'm using the SPY, and the SPY gives me pretty good approximate of what the S&P is doing pre-market. So here we have an hourly chart, and I put it on an hourly chart because it would allow me to kind of go back a bit to these levels back here that I have marked off. So back here, let's see, on the 2nd of February, the beginning of February, and then the 9th of February, roughly the middle of February, in this area right in here, you can see we had this kind of double top formation. After it tried to recover, it failed and then went lower. And now, so technically on a daily basis, let's go to the daily here, we haven't had a close. Oops. So right here, after these closes right here, these two closes, we haven't had a lower close since then. And we have had a higher close since this point back here, since these back here, new lower lows were put in, and a new higher high was put in. So it's it's not as orderly as we like to see now. The market's never gonna do. I mean, it very, very rarely does exactly. You make the picture perfect patterns. They come up every once in a while, but otherwise, most of the time, you just got to do the best with what you've got, which is always true. I mean, you always got to do the best with what you've got, but it's not as picture perfect and easy as some chart patterns are really, really easy to pull out and then make future probabilities on for trading. So okay. There's still not enough time that's passed to know whether this was a look above and fail. Well, obviously, actually, it's quite obvious it was a look above and fail. But is this, a precursor for the next move higher? A lot of people probably got pulled in right here on the long side after it beat these highs over here. A lot of people started going, well, I guess it's going long, And I think even yesterday I was like, yeah, it's starting to look really bullish, I was still, my bias is still to the downside. I am still bearish this market. And it's got to do with a couple things. One is the inverted yield curve, which actually popped out of inversion yesterday. And usually when you see a downturn in the market, it's after the yield curve comes out of inversion. Now, this could be temporary. I'd be surprised what I think is going to happen is it's going to pop back out of inversion, and then it's going to kind of drift back and go back below again. That's my guess. And it's just a guess. But in the past, here, you'll see that it's after it inverts and then comes out of inversion that things get really the worst for the stock market, for the overall stock market. So this is roughly, let's see, this is August, September, October. of 2019 and then going into the beginning of 2020, it was, that was pre-COVID, but even with COVID on the way, the stock market was about to, start taking a huge dump anyway. So here we've had this sharp decline into inversion, and now it's popping back up above inversion again. I think that we're probably going to see a pretty a pretty steep run, sort of like a V bottom, a bounce, real nice bounce off of this level, and then we'll probably see it come back down again. In here, in this area right in here of the yield curve coming back out of inversion, we ought to see the stock market take a hit. So I'm kind of thinking this recent downturn in the stock market here, if it makes new closing lows. So technically speaking, this isn't open. This low down here, this is an open, and it's not a new low. Actually, it's not a closing low. This is an opening low, which doesn't count. It closed way up here on this candle right here. The levels that, if we close below on this next sort of run down, if we close below 415 right in here, then that is going to be very bearish, very, very bearish. I don't know. I mean, I think things are headed that way with the economy the way it's doing, and kind of just where things are going right now. It makes more sense for me for things to be going down rather than up. But I did not foresee this, gigantic run. This is on the SPY, so it's like an 11% run on the Qs. It was like a 17% run on the XLY. It was an 18% run on Tesla. It was a 52% run from here to here. 52%, incredible. And actually, Tesla really fell away from its. This is a support and this is a resistance line, and it really popped right up there and then fell away. You see the resistance line goes from here to here. So yeah, it's looking like if anything, at least there's going to be a pullback. The stock market doesn't go up in a straight line. If it's going to continue to go up, at least it's kind of pulling back a little bit to give the longs an opportunity to jump in for more opportunity. I'm waiting right in here. I'm waiting to see what happens if it starts making new lows and closes below this 415 mark down here and closes below that. It's we're looking at. We're looking at a pretty long drop. All right, so let's go over here. There's something else I wanted to look at. Yeah, there's XLY. This is consumer discretionary. There's no way, in my opinion, there's no way that consumer discretionary is going to break out over the next 6 months. I mean, the consumer is getting squeezed by just higher everything. Like my water bill has gone up to $120 a month. My power bill is $300 a month now, and that's up from $20 8 years ago for the water bill, and up I think I was paying $120 a month in power 8 years ago, and now it's at $300. And then gas, there's so much going into utilities and what could be considered staples that discretionary, there's just, in my opinion, there's just no way discretionary survives over the next 6 to 18 months and goes higher even. In my opinion, it's going to go much lower. That's my opinion. So, I'm just kind of keeping an eye on that. Let's see, there's the inverted yield. Oh, yeah, Bitcoin. So one of the really good indicators of risk on, risk off is Bitcoin. Now, Bitcoin has done something pretty neat here recently, and that is it has gone into this sort of range right here. This red range right in here is the bearish range. The neutral range right in here is this yellow range, and the bullish range is this green area right in here. So as of right now, Bitcoin went on to make this sort of higher high here recently, and has put itself back on a pretty decent trajectory. I imagine that's probably going to come back into the 42,000 area here, and I imagine that will probably, that's going to be an important level. If it bounces off, if it holds and bounces off and continues on to new highs, it's much more bullish all the way up to 53,000 roughly. Today though, right as of right now, it's saying risk off. Back here in this run, back here on this day, it was saying risk on. Back here in this area, it was saying risk on. Now it's saying risk off. And Bitcoin's been doing a pretty good job of acting as a weather vane for risk on, risk off. So today it's saying risk off. So I am going to be looking for the short setups, and I'll be using, of course, relative strength on the VIX in combination with relative strength, probably on the Qs. I'll probably use the Qs, and I'll look for opportunities to go short today on the Qs. So yeah. All right, everybody. That is my morning strategy session. Oh yeah, and Tesla and Amazon. I'll probably look for opportunities to go short on Tesla and Amazon today too. All right, everybody. That is my pre-market strategy session. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.